Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
What a day it has been. Hello and welcome to Chartbusters. Well, who would have thought we're down close to around 150 points on the Nifty. The Sensex is down far more, and in fact, the Midcap index, the advanced decline ratio, that's telling you the picture. Just take a look at that. Only 90 stocks are advancing on the NSE, and in fact, we have more than what? Close to around 2,000 shares that are declining on the NSE. So the crisscross line should come up for you on the screen. Mangalam, things are not looking good. I've heard of a hangover, but what a hangover it has been.
What a hangover, Nigel. Not for the faint-hearted, for sure. 650 points off on the mid-cap index. And tell you why I say not for the faint-hearted. Because if you take a look at the F&O stocks, I'm not talking about the cash stocks, which are down lower circuit right now. F&O stocks, PC Jeweler recovered, but still 35% lower. GMR in fact down 13%, and Just Dial down 13%. F&O, you pay a margin of 5% or 10% at best. If the stock is down 10%, what you've done is lost your entire capital.
Absolutely.
For a stock that has lost more than 10%, you've lost more than your capital. Someone who would have bought PC Jewelers for a margin of 10% is losing 3 times the money that he's put in. So he's not only losing his shirt, also losing other pieces of clothing.
Yeah, Mangalam, I'd like to look at some positives at least. At least we're seeing some kind of recovery from the low point of the day. So let's see whether or not we can sustain some bit of a recovery. But as things stand, please, retail audience, be very, very careful, when you're going out there and trading. I don't think today is really the day whether you should be deploying some money, but I'm not the expert. The expert is with us. Prakash is with us. Prakash, I was going through your blog, and you were mentioning that maybe in fact the market in the near term, we could be, we could have hit the highest levels we'll see for a while. Are you holding on to that thought?
I think so, yeah. What has happened is from 2008, if you see the bottom out there, to until 2014. When you look at the monthly chart, we have seen corrections twice. Once of 14 months, another of 12 months.
Right.
When we had a target like this, we had a beautiful target of 11,300 or so. But in the shorter term time frame, we had a target of 11,169, which I've been mentioning here for a very long time. And we have hit last week 11,171, just 2 points away.
Yeah.
So targets are achieved. This classically is the textbook pattern of an exhaustion on a monthly time frame basis. When a market gets exhausted, it needs to pause, it needs to rest, it needs to correct. You can call it correction, consolidation, pause, or whatever.
Yeah.
The place is just right.
Right, but Prakash, when you get exhausted, then you fall, right? So how much can we fall? Since we're exhausted at the top, then we have to collapse, right? So, what's the level? 10,700, 10,500, or can we actually, oopsie? Is that possible?
I think basically when you look at the charts, basically you can say that 10,600, 10,500 is a possibility. A good correction is possible from here. Maybe around 10% or 8% or 7%, but correction certainly is possible.
But what a run we have had as well.
Oh, we have had a beautiful run. And if you correct, it's okay. What's wrong in correction? Absolutely. In fact, you get a breather, then you take a fresh run again.
Okay, tell you what, you're talking about a breather. The one thing that may give a technical analyst a near-term relief is the fact that we're still holding on to the 20-day moving average of 10,850. How long before you think that gets violated as well? Maybe we're showing some respect out there while the mid-caps take the pummeling. When does Nifty say, okay, I'll take one for the team too? I have risen a lot more than the mid-caps in the recent past where the large caps did outperform. You think there is a case for the Nifty to go much lower, below all the levels that people have been talking about?
Yeah, I think so. Because 20 days moving average means the price oscillates between the 20 days.
Right.
It can go over, now it's holding, it can go below as well. So far it's up, it's holding there, it could crack and go below it also. So it oscillates around 20 days.
Okay, all right, Prakash, we have to keep an eye out on PC Jewelers. We have the management telling us nothing is wrong, Q4 is going to be good. I haven't sold any shares. The market's listening to that. I remember the stock was down close to 55%. I think the low it hit today was 217. 217 is the low that it hit. So from there, the stock has recovered more than 120 rupees. So just keep an eye out on that stock. But Prakash, that's about PC Jewelers. We want to hear what are your stocks for today?
I have 2 stocks, and I would say both on the shorting side. Bata looks more of an exhaustion pattern. Again, a safe short here. We could see a slide to around 675 zone. Bata stop about 708. And second stock that looks weak to me is Coal India. Here too I feel it's more of a tired zone out here. We could see a slide to around 280 zones, stop about 295. So Bata and Coal India, both shorting opportunities.
All right, both shorting opportunities. Thanks a lot for that, Prakash. That was a short, rather short.
My budget speech yesterday with regard to the LTCG, and therefore these are decisions which are taken after a lot of deliberations.
So there is
And
no
I'm
possibility.
sure there is no, as far as the markets eventually will have to realize that India is one of the soundest economies in the world today. India is one of the fastest moving economies in the world. And the kind of expenditure we are going to be taking in the course of this year is certainly going to help India, which is poised for a very good growth this year itself. And ultimately, it is the intrinsic strength of Indian economy on which investments into India and the strength of the markets in India itself will depend on.
So one quick question, sir. As far as growth itself is concerned, now you're factoring in a 7.2% growth, and you're pretty confident of the tax buoyancy, both as well as GST as well as direct taxes are concerned, sir. What is giving you that confidence? And specifically, I wanted to ask you a question on the e-way bill, because that was taking off yesterday, but it's faced some technical glitches.
See, our own experience has been that whenever we've started this, just as when we started the GST itself, the software system gets overloaded in the first instance. And then when it gets overloaded in the first instance, it stabilizes after a couple of days. They've had this problem yesterday, and I'm sure the GSTN and the concerned authorities are looking at it.
Okay. So one quick question also on the disinvestment targets. Do you feel confident that just like you were able to exceed it this year, you will be able to exceed it next year as well? Does that give you the additional revenue cushion?
Well, so far I'm looking at the 80,000 crores, and I think I'm quite comfortable with 80,000 crores.
And Air India, sir, by when do you expect that process should...
The process is in motion, and I don't think it's fair for me to comment on a day-to-day basis when it's going on well.
What would be your biggest challenge at this point in time, sir, outside of oil prices, which are not in your control?
I think it's always a challenge for anyone to implement the ambitious programs which you have announced. The MSP is a very ambitious program. The healthcare is a very ambitious program. And I think implementing them, really, the success really lies in that.
One final question, sir. On the healthcare, you've allocated 2,000 crores as a start, sir. What is the broad estimation in terms of what it could take?
I think the estimation would be after the Niti Aayog and the concerned ministry negotiate with various the insurance organizations. And once they did that, it's only then that we'll be able to have an amount. Whatever amount over and above 2,000 crores is required, I'll certainly make it available from the budget.
Mr. Jaitley, thank you very much for joining us. I appreciate your time, sir.
Okay, so those are a whole host of questions which are answered by Arun Jaitley at this point in time and exclusive to CNBC-TV18. But for the markets, yes, it is an intraday recovery that we've seen, but not as much as we've hoped for or anticipated. So we're still down over 650 points for the Midcap index, and for the Nifty, we're down over 150 odd points. Not looking that great. Let's see whether we manage to recover at least in the second half of trade. Hi, Prashant.
Ekta, hi. And I think today, in some ways, after a really long time, you're seeing, and for many people, this is, I would dare say, a real first correction, a glimpse into a correction, especially the way the mid-caps, etc., are selling off. I want to preface my comments by saying that, you know, a couple of things have come together. I mean, look at the backdrop, right? I mean, you have this tough fiscal deficit situation. You know, people questioning assumptions, numbers, etc., on direct tax. Then you've got what's happened with bond yields here in India and what's happening in the US. US bond yields hit about 2.8%. Now, you might say, and many people are saying, that that is basically reflecting the reflation trade, that global growth is coming back very strongly. But beyond a point, bond yields at that level start to hurt. What is that level? We can continue to debate. And then you lastly add the point about what's happened in Rajasthan politically, the bypolls. You know, it might not have moved the market or mattered to the market or standalone, but the point is all these things are coming together after a while. I mean, they're all coming together in one single day. So you're seeing this you know, big fall that you've got. Now, specifically, with regards to what's happening in mid-caps, I want to make a couple of points. One, if you just notice the correction, where is the most severe correction happening in mid-caps? It's happening in stocks which were, I mean, I don't know what are the word to use, what are the two words to use, but I'm calling it ramped up stocks. You know, stocks which went up 3, 4, 5, 10 times. And there are multitude of stocks. Actually, there has been, if you ask old timers, there has been no real one episode, 3 or 4 year episode when stocks, not to forget the indices, stocks went up this much. So I'm talking about the period between 2013 to now, to last year. So the large part of the sort of great brutal correction is happening in these ramped up stocks. You can also throw in, and these ramped up stocks will also have stocks which anyway had, questionable fundamentals or, basically questions are asked around them, but stocks continue to go up nevertheless. If you, now imagine if you were actually holding some of these stocks and you know that beyond 31st of March 2018, if I sell, I'm going to be taxed long-term capital gains at 10%, and I've got this two-month window. Remember, any sale over the next 2 months, till the 31st of March, there is no long-term capital gains. So if that is the case, I mean, you actually have a great motivation to sell, because I mean, maybe you bought it because stocks were going up and you hope to sell it to somebody at a higher price. I mean, those are the kind of stocks which are seeing the greatest amount of fall. And I think it's very clear. Just look at the top 100 stocks which are falling and, go back and see what these stocks did. You'd see that they had multiplied manifold times, and some of them you really couldn't identify and say, well, this was the great trigger or that was the great trigger. Stocks just sort of got on with a life of their own. So I think one has to keep this in mind when one looks at stock prices. I think, on top of all of this, all the cues that I've mentioned, one has to remember the great run that stocks and markets have had. So I think the psychologically, for many people, as I said, this would be a first big mid-cap kind of fall in many months, maybe the last 1 year or so. So I think it's a first in that sense. But we'll come back to this. I think we've got the Fitch guys joining us now to talk about what they make of the fisc, etc.
Yes, absolutely. Well, the fiscal deficit target for FY19 has been set at 3.3%. Thomas Rookmaker, the Director, Asia Pacific Sovereign Ratings, Fitch, now joins in on the phone line. Thomas, hi. Thank you very much for joining in. Well, what's your overall analysis of the budget yesterday, along with the fiscal deficit targets?
Sure. Hi. Well, from a sovereign credit perspective, a notable feature of the budget is the postponement of the fiscal consolidation. Clearly, the fiscal relaxation is understandable as the economy is not firing on all cylinders, but it delays the pace of the previously planned fiscal consolidation, and the government has now kicked out its steady state 3% fiscal deficit target further to fiscal year 21, and that's well beyond its term. In this government's initial fiscal medium-term plan of 2014, you may remember that it first announced to postpone the 3% target from fiscal year 17 to fiscal year 18. So, they could have reached that by now. More generally, I think the fiscal forecasts in the budget are credible. The 17% increase in revenue estimated for the coming year may look ambitious compared to the government's forecast for nominal growth, which is, I believe, 11.5%. But it looks more credible if you take into account that, the positive experience with the GST revenue so far, which was well described in the economic survey. Moreover, the rollout of the e-assessment may also contribute to higher income tax revenues in the future. Now, there are some risks also on the fiscal front. So there is the risk that if revenues would disappoint, the government may not be willing to cut expenditures as it did in previous years to reach its fiscal deficit target, as we're now in an election year. And another risk is related to higher oil prices than budgeted for, although we have to realize that fuel subsidies have been reformed a couple of years ago as well.
I just want to focus on this as revenue assumptions. You were saying they're credible, but how would we know at this point for sure? Because, I mean, the GST system is still settling down.
Yeah, well, that's a fair point. You never know for sure, right? So it's.
So I mean, wouldn't
no,
it be? Wouldn't it make sense to be a little conservative?
Well, like I said, I thought there was a very interesting chapter in the economic survey which pointed out that the GST revenues may well maybe significantly higher next year than what we've seen so far.
Okay.
So and also on the 17%, like I said, it is high. It is high compared to nominal growth. But last year, when we had similar nominal growth, the increase in nominal revenues was actually also 15%.
Okay. Thomas, the other thing which has really stirred sentiment on the downside for India is the kind of hardening that we've seen for the 10-year, for the bond yield. We're now at around 7.68 for the 10-year. What's your sense in terms of how much of this is probably domestic and local related, because we're probably going to see interest rates hardening from here on, and how much of it do you think is also global related, considering what we've seen for the US 10-year?
Yeah, that's a very good question. It's a bit difficult for us to answer because we're not participants in the market itself. So, there are other people who have a better picture of what's going on in the markets. But clearly, there is an external element to it, and with as well as a domestic element. If we're looking at to link this to the budget, if we're looking at the proposal to have the minimum support prices, linked to the costs by 1.5 times. That could push up inflation going forward, and that may lead to monetary policy tightening, which again would lead to higher yields as well. So I don't know to what extent that would have, could explain the firming up of the yields so far already. But there's also the external element clearly of policy hikes in the US.
Okay, Thomas, before we let you go, could you reiterate your outlook on India as well as your rating? And does this budget change anything, at least on the upside or the downside, or is it just status quo?
Well, I would say, like I said, the postponement of fiscal consolidation, is notable. But as a positive thing that I haven't mentioned so far is that, that this government is committed to adopt the recommendation of the FRBM committee to adopt a ceiling of 40% of GDP for the central government debt. That's positive. Even though the current medium-term fiscal plan will make it unlikely to reach this level by fiscal year 23, as the committee recommended last year. But it will be interesting to see what exactly this government is going to table in this regard. Now, if we look at the rating, we look at a range of indicators, not just public finances, but public finances do constrain India's sovereign ratings. The general government debt burden of India is around 68% of GDP. The median of the BBB category countries, so the countries rated BBB minus like India, BBB flat or BBB plus, is 40% of GDP. And the fiscal balance in India is, if you include the states, is around 6.5% of GDP, and that's wide compared to the BBB median of 2.5%. So one of the main factors that could trigger positive rating action would be implementation of fiscal initiatives that increase the likelihood of a decline in general government debt over the medium term. The last time when we affirmed the ratings was in May last year, and then we affirmed the ratings at BBB minus with a stable outlook.
Thomas, thanks very much. Appreciate you joining in. Good speaking with you there. Let's focus back on the market. 145 points lower on the Nifty is what we've got. 10,869 is basically the price. I mean, I just want to put out one particular stock, and this is Interglobe Aviation. I mean, if you can have the intraday up, that's seen a sharp recovery. The low was 1146 on this one, and take a look at what it is at now. 1197 or so on Interglobe. And there are others as well which have seen recoveries through the course of the day. I mean, DLF, for example, was down 15%, it's down 8%, etc. We'll get more on the market in a bit, but Mitesh Thakkar is with us. Mitesh, good morning, good to have you here. Your sort of sense in terms of how the market is behaving. I think last we had you on air, we were already down 150. I think you were saying 10,550 odd is an important level. For now, it's holding at 10,800, 10,860.
Yeah, I think I mentioned, good morning Prashant, I mentioned 10,850 as the key level to watch out in the short term, but I also said that eventually, you know, with this kind of force coming today and the indicator setup turning negative, I think while it might hold on for a day or two, maybe 3-4 sessions and give a bounce back as well, I think eventually it does suggest that there's a strong possibility of 10,850 being taken out. So given that kind of scenario, now that we're close to that level, ideal thing would be to wait for 10,850 to be taken out properly and then sell. So if it's below 10,850 towards the closing today, I think I would sell, or wait it out. I think then you will get a bounce back to sell. And I think eventually we should head towards 10,590 to about 10,550, which was the upside gap when this entire melt-up movement started. So I think those levels could be revisited. And for the time being, 10,850 is the immediate level to watch out for.
Okay. What would your picks be, Mitesh, in such a volatile market?
Yeah, so I have in fact 2 sell calls, and I've been maintaining that, you know, financials can be sold on while IT still remains a stronger back. So I have 2 sell calls on the bank side. Federal Bank is a sell with a stop at 97.5, look for targets close to about 90. And DCB Bank is a sell at slightly higher level, so I would say try to sell it around 170, keep a stop at 174 and look for targets of around 162.
All right, Mitesh, thanks very much for that. We speak with you soon again for more as far as the market is concerned. You know, what we're going to do is we'll play out that conversation which Shireen Bhan had with the Finance Minister, Arun Jaitley, just a while back. I mean, we actually played that out as we were starting the show. Let's just listen into that again and come back after the break.
I want to ask you about the markets at this point in time. We have seen a significant fall, especially in the mid-cap sides. And the worry is that the government is continuing with the STT and, of course, has reintroduced the LTCG. Is there any possibility of a rethink on at least the STT, sir?
Well, let me tell you, the STT has conventionally had a very nominal impact itself. And I think we had consciously taken a decision which I've already explained in the course of my budget speech yesterday with regard to the LTCG. And therefore, these are decisions which are taken after a lot of deliberations.
So there is no
I'm
possibility.
sure there is, as far as the markets eventually will have to realize that India is one of the soundest economies in the world today. India is one of the fastest moving economies in the world. And the kind of expenditure we are going to be taking in the course of this year is certainly going to help India, which is poised for a very good growth this year itself. And ultimately, it is the intrinsic strength of Indian economy on which investments into India and the strength of the markets in India itself will depend on.
So one quick question, sir. As far as growth itself is concerned, now you're factoring in a 7.2% growth, and you're pretty confident of the tax buoyancy, both as well as GST as well as direct taxes are concerned, sir. What is giving you that confidence? And specifically, I wanted to ask you a question on the e-way bill, because that was taking off yesterday, but it's faced some technical glitches.
See, our own experience has been that whenever we've started this, just as when we started the GST itself, the software system gets overloaded in the first instance. And then when it gets overloaded in the first instance, it stabilizes after a couple of days. They've had this problem yesterday, and I'm sure the GSTN and the concerned authorities are looking at it.
Okay. So one quick question also on the disinvestment targets. Do you feel confident that just like you were able to exceed it this year, you will be able to exceed it next year as well? Does that give you the additional revenue cushion?
Well, so far I'm looking at the 80,000 crores, and I think I'm quite comfortable with 80,000 crores.
And Air India, sir, by when do you expect that process should...
The process is in motion, and I don't think it's fair for me to comment on a day-to-day basis when it's going on well.
What would be your biggest challenge at this point in time, sir, outside of oil prices which are not in your control?
I think it's always a challenge for anyone to implement the ambitious programs which you have announced. The MSP is a very ambitious program. The healthcare is a very ambitious program. And I think implementing them, really, the success really lies in that.
One final question, sir. On the healthcare, you've allocated 2,000 crores as a start, sir. What is the broad estimation in terms of what it could take?
I think the estimation would be after the Niti Aayog and the concerned ministry negotiate with various the insurance organizations. And once they did that, it's only then that we'll be able to have an amount. Whatever amount over and above 2,000 crores is required, I'll certainly make it available from the budget.